Shares of Aveva, of course, this is the London-based engineering software company, rising 10% yesterday, another 5% or so today. This after announcing agreements to buy the SoftBank-backed company, Osisoft. Bloomberg's Ed Hammond caught up with the CEO of Aveva, Craig Hayman, to discuss the deal and why the company looked to make an acquisition in such an uncertain environment.
Osisoft, we think, is one of the jewels of the software industry as it relates to the industrial software. They, for 40 years, have been collecting industrial data together with time and sometimes location and building up a history for customers of this data. That gives rise to this term, historian. It's used, has over 2 billion sensors are storing data into the Osisoft Pi historian. Over 200 interfaces, over 2,000 sites around the world, and it really is when you're trying to do things like a machine learning or artificial intelligence, data becomes quite important. So for Aveva, Osisoft has always been of interest, and I think many people have been interested in Osisoft, but we were able to get a package together for the founder that had the right value and also the right values to continue the next chapter of the company. It's been around for 40 years, so as the founder says, this is about the next 40 years.
As you say, Craig, it was a very competitive process. I think we reported a lot on the sort of, the twists and turns of it. Talk to me about why now is the right time for a company like Aveva, or indeed any company, to be going on the front foot, doing M&A, expanding sort of reasonably aggressively, versus what we would expect companies to do at a time like this, which is kind of conserve cash, be careful, stick to their knitting, if you like.
Yeah, and look, as we went into COVID, Aveva, we were very prudent. We acted quickly, as did all of us, very swift to move our employees to have them work from home or work remotely, very swift to conserve cash. We have a good business, a solid business. We haven't furloughed any employees. We're not taking any advantage of any government programs. We conserve cash by things like we're not traveling, we're not flying as much anymore. We moved to digital events. Any sort of discretionary. We battened down the hatches because the world was uncertain. As we've gone through COVID, we've realized there is still a good level of demand for our products. I mean, our products we sell to industrial companies who provide the staples of our lives, like food and pharmaceuticals and energy and oil and gas. And so, realistically, that demand is relatively stable. So as we got through that, and we started to figure out our new normal, as we all say, this new way of working. We ourselves have become digital. We found a little bit of increased demand for our digital software in our customers, and we said, look, it's fine for us to be prudent, but there's no reason why we shouldn't be sort of counter to the model. And if there's opportunity for us to continue our journey to be the leading independent industrial software company, we should take it. And the numbers work. Osisoft, it's a good company, very similar to ours.
On that point, Craig, how much of those savings that you talked about, the things you did immediately when COVID hit, of battening down the hatches, how much have they allowed you to go out and actually do deals like the Osisoft one because you have conserved cash and because you have, as you say, made savings as a business?
Yeah, Aveva, the business has done well over the last 2.5 years. We've doubled in size. Our market valuation has increased. We paid a dividend recently. As I said, it's a good business. And so you start to realize, what are the assets of the business? Our balance sheet, we really hadn't leveraged the balance sheet before. We had very little, almost no debt before. But so we really stretched our minds of how to do this. And that's how we got to what is a $5 billion enterprise value purchase price on a cash-free and debt-free basis for Osisoft.